Good evening from London. The index of UK blue chips was trading in positive territory today as markets shrugged off growing concerns about the Delta variant of COVID-19. Leading the pack was Associated British Foods. The owner of the Primark retail chain's third quarter figures were well received by investors, with shares up 3.7% in early trading. The cut-price fashion retailer has recorded a 3% increase on pre-pandemic revenues, helped by popular items such as blazers. The group said Primark's revenue was £1.6 billion in the third quarter to June 19th, up from £0.6 billion in the same period last year. The American high street retail giant Gap announced last night that it will be closing all stores in the UK and Ireland by the end of the year, putting 1,000 jobs at risk. The company is also considering reducing store numbers in France and Italy. The move comes after a year of coronavirus lockdowns have battered the UK high street, with other popular chains, including Debenhams and the Arcadia Group, also going under. In a statement, bosses blamed market dynamics for the closures and vowed to offer support and transition assistance for staff members. The retailer will now be an online-only store. At its height, Gap was one of the most recognised brands in the world, with stores across the US, Europe and Asia. Nissan has announced a £1 billion plan to build electric cars in the UK. The major investment by the Japanese car giant for its Sunderland plant will create 6,200 jobs and will become the largest battery gigafactory in the UK, capable of producing batteries for up to 100,000 vehicles a year. The announcement is a dramatic change in fortunes for the factory, which, before Brexit, had faced questions over its future. The site is expected to open in 2024. From 2030, sales of new cars and vans powered solely by petrol or diesel will be banned in the UK. Japan's factory activity expanded at the slowest pace in 4 months in June, as a sharp recovery in major global economies has pushed up raw material prices. Expansion has also been affected by the global chips shortage. The final manufacturing PMI data slipped to 54.2 last month from 53 in May, the lowest reading since February. The soft PMI numbers underscored concerns about a possible delay in recovery across the world's third largest economy. However, employment in the sector continues to grow and manufacturers continue to express higher levels of optimism about an anticipated uptick in production over the coming year. Those are your main stories from London at close of business.